Words out there, man. Lots and lots of words. Hey, what's good, everybody? Happy Tuesday. How you doing out there? Hope all is good with you. Welcome to our show. We are financial advisors here at Jazz Wealth, the financial advisor for the everyman or woman. If you want an advisor that's here, that actually works every day and isn't always out of the office or spending money to be on Dave Ramsey's show, then I hope you'll join us here at Jazz. And I hope I teach you something, right? The goal of us is to be teaching advisors, right? That should be what we do on an ongoing basis, teaching you tricks and all the things that are actually legal for you to do. We are happy to help. We're going to talk about the stock market here today. Also, some kind of breaking news. The student loan payments paused until June, the end of June, really. What's going on? What are we doing? So apparently the student loans have been paused in order to give the time for the Supreme Court to hear the case about whether it is legal for a president to be able to be the decision maker in terms of getting rid of student loan debt. I don't know. I don't know enough about the law to tell you whether that's the case, but I don't know. That's up for you guys to decide. Well, it's up for the court to decide, really. But nonetheless, if you have federal student loans, then yeah, there you go. You don't have to make payments till end of June, for good or bad. I don't know how that plays out. But anyways, for the stock market today, we are performing basically as in line with what we shared with you the other day. This would have been yesterday, actually. The stock market tends to have its best day on the Wednesday leading up to the Thanksgiving break. However, I don't know. It's kind of hard to beat today. That was a pretty good day, right? I don't think anybody's complaining about that. If we look over here at the charts, you could see we're working our way back towards the downtrend. The stock market is very much still in a downtrend. The S&P, I should say. So S&P is still very much in a downtrend right around the 200-day. And the question becomes, is it worthwhile to take the shot now that we're going to break above the downtrend? Whether you like technical analysis or not, it's totally fine. But that is the risk to reward at this point. It is a very obvious, clean downtrend. And so for you to be a buyer at this point means you believe that we start the break of the downtrend, meaning, the market can be in a confirmed end of the downtrend. So I don't know whether that happens or not, but that's the bet that you'd have to make. If you're looking at the S&P today, energy was the big contributor, gainer. It was the biggest gainer out of all the sectors there. We're going to cover that here in just a little bit. You got oil bouncing back from its flush out to lows just the other day. And then I'll also point out tech stocks. Big help today in terms of being a contributor to the gains in the market. Really across the board, semiconductors were the biggest industry to help you out today. So you could use the SMH, the SOX, whatever you want to do to take a look at that. I'll point out NVIDIA as being one of the bigger gainers, almost 5% higher on the day. Texas Instruments, the same thing, and although a little bit stronger overall, it doesn't really matter where you look. QCOM had a great day. Broadcom, AMD, Intel, Advanced. Oh, no, there we go. Analog devices right there. And of course, some are stronger than others. It's a good area to look if you're saying, I'd like to add some positions to my portfolio, but I don't want to pick on the weak semiconductor stocks. Well, a very quick little search through there, you'll be able to figure out what's going on and where you want to participate. Even Oracle had a good day. Look at Oracle. Well, that's 3%. That's a big day for Oracle if you're not familiar with the stock. Of course, yeah, well, way to go. Adobe, one of the weaker ones, of course, but that had a decent day, about 3% on the day. And as you look around, if you look at sectors individually or anything like that, I said a second ago, tech was the second best. It was the best in terms of the contribution that it made to the growth today. I do want to point out basic materials. You could use like the XLB or something. Relative to the stock market, this is much stronger, meaning it is outperforming the stock market here in the short term. And it's nice to see maybe the start of something in communication services. I don't know. That's been a weak spot there. I'll tell you this year so far, and even hedge funds, which I'm going to cover the hedge fund data here in just a little bit. Even hedge funds have made the switch from being you would say overweight the consumer discretionary space to overweight consumer staples. That's very clear, crystal clear on the charts if you want to take a look. And so that's what you have going on there. I do want to point out something interesting happening in the crude oil space. There's a big divergence happening here that is very rare to see. So we have oil trending lower, but we have the energy sector still trending higher. There's typically a pretty tight correlation there, meaning normally you have energy and oil moving in the same direction. That is not the case here right now. In fact, we have a divergence that we have not seen recently. 70% year-to-date gains on the energy sector. I'm using the XLE if you want to follow along there. And we've got oil only up 6% basically on the year there. There's only 5 other times where you've seen a divergence this wide in the last 30 years. So it's significant, right? Because it's a very rare event to see something like this. So I just thought, okay, well, what happens? Either A, energy pulls back with oil, or B, oil goes up with energy. Something's going to happen to close the gap there, right? It's very popular to do in the retail space for whatever reason. That it's not arbitrage, but that sort of spread capture play is really popular in the retail space. But anyways, 4 of the 5 last times where we had a divergence this large, crude oil was actually the thing that bounced. Energy stayed strong, crude oil stayed or got stronger. In none of the instances, in none of all 5 instances, no matter where you want to look back there, was energy this strong. So this is actually really unique, the fact that energy, the sector, is this incredibly strong and there's this large of a divergence. I would have bet, if I didn't know the data, I would have said energy pulled back. However, that did happen once, but however, we've never had energy up so much. Right? The last time was like 12%, the spread anyways. And so this is massive. Right? So just something to point out there. If you're in the energy sector, you may want to consider some kind of, I don't know, trailing stop. If you do those sort of things, you may want to consider looking at oil and saying, maybe there's a good risk to reward here. Maybe something I take a look at. I don't know. That's up to you. I do want to point out that Thursday, there'll be no Wine and Wealth and probably no show tomorrow. We'll probably just try to let everybody sneak out a little bit early if you don't mind. I don't know. But typically Thursdays, we do our Wine and Wealth classes. Of course, that's Thanksgiving, so we'll go ahead and skip this one. We do have some great classes up there for clients over the last couple of weeks. The Augusta Rule, which I've been teasing a lot because I see every kid get this wrong on Instagram and TikTok and wherever these videos come from these days. You got to be really specific with it. So we have a class. We give you the handout to actually share with you. This is what you need to do. If you don't do this, you will not be able to participate, according to the IRS. And then last week we talked about details and things that you might want to consider before the end of the year. Again, with a handout, something for clients to take and say, well, let's see which one applies to me. I'm like amazed at how many clients have taken that and said, I've got a question, right? That means you're paying attention, man. Just pay attention to your money. I love that there. Anyways, let's try something different here today. Since the market is, this would be called a trend day, by the way. If you were following along, you could use something like the SPY and you just go down to the 5-minute chart here, or 2-minute, or whatever you want to do. You would look at something and say, well, this performance today is called a trend day, meaning once the trend was established, it did not change its mind all single day. Volume extremely low until the end of the day there, and just if you tried to fight that trend, you lost. That's basically what a trend day is. You can't go counter trend. There's almost no chance for you to make any money. So because of that, oh boy, there's the wrong button. So because of that, we're going to try something different. Have you ever wondered like how hedge funds are doing? See, they only get picked on when they underperform the market, which is not really fair because not every hedge fund is trying to beat the S&P. Some of them are wildly trying to beat it, of course, but some of them are more interested in things like toll roads. Did you know that there are hedge funds set up purely to allow people to participate in the bonds that are offered when they build toll roads? So it could be that you're rich and they come to you and they say, hey, you put in $1 million and you'll get 1/4 of a penny every time somebody pays the toll for the next 10 years. Well, that return, there may not be a lot of people that go over that bridge, I don't know, or wherever they're charging these tolls, but people say, okay, well, I need somewhere to put $1 million, and I'll take that quarter of a penny every time someone goes over that bridge to repay the bridge and so on. And so that doesn't have a correlation to the market. Well, anyways, hedge funds as a whole typically are referenced to the market's performance, and typically their performance and stuff, the fees that they charge are based on that. So I thought we'd go through a little bit of that and I'll just show you something that maybe you find interesting. I don't know, maybe not and you left already, I don't know. Let's start with this. Here are the top 50 positions that hedge funds have held this year, ranked from largest to smallest. I hope you can see it. It's hard to put 50 positions on one chart there, but here we go. This is using all of their 13 Fs throughout the entire year and using the weighted average of the positions that they've held during the times that they've held them. So number one, the biggest position that hedge funds held this year was Netflix. Watch where I go with this, by the way. This is going to do something a little different. You've got a whole list here, some things that you can look at the names, right? I don't have to go through all of them. Some things I want to point out. Microsoft, where did it go? Now I got to try to find it. Microsoft bumps up on the list. There you go. Outpacing Alphabet, Salesforce, Disney, AMD, Amazon, Meta, and Tesla, right? So Microsoft moving up on the list compared to last year. Tesla slid downwards towards the bottom of the list as compared to last year. And one that I found interesting was still Uber. Uber staying on the list, moving up the list throughout the year. Here's the cool part. Let's pretend that you were one of those people that follows these 13 Fs and you say, I'm going to buy what they buy, man. I'm just going to be right there with them. And then it's kind of like I have a hedge fund, right? If you did that, you are wildly underperforming the stock market. I mean, wildly. Take a look at this. The S&P, right around 16.8% down for the year. Those positions as a portfolio in their respective weights, down 29.7%. So you would think, oh, tough year to be in a hedge fund, right? I'm glad I didn't do it. Actually, you'd be wrong in that case. The average hedge fund that's an equity hedge fund is down only 5% for the year, a little bit less after today. How could that be? How could they have such losing positions here that, not losing, but they've pulled back significantly since last year? How could that happen that they are not underperforming the stock market? In fact, they're doing a lot better than the stock market this year. It's their exposure. You can look up their exposure here, and since the turn of the century, they've never been less exposed to the markets. Right? This is a simple beta comparison of the hedge funds relative to the Russell 3000, which is making sure we include everything because not every one of those stocks is in the S&P. And so they're basically, out of the market, right? The most out of the market they've been all year long. Kind of smart, huh? It's kind of like Jazz here, where we operate our own funds and we've been largely out of the market as well. Therefore, our performance is not as small, or not as bad, I guess, as everybody else. Here's their comparison. And traditional asset managers would be considered Wall Street, right? So if I say the street, I'm referring to the traditional big guys, right? That manage assets in lots larger numbers than what we do here at Jazz. So traditional asset managers' exposure is also near lows, but they're still not net short the market. If you look at the hedge funds there, their exposure to the market has been net short. Well, there you go. That's why they're beating the market there. They've had a bulk of their positions betting on the market going down, and then they've had money in cash, of course, while they still held those positions that are pulling back. What's that tell you? If they were to start to cover their positions, if we find out in the first quarter of next year that right now they're actually covering positions and adding to those stocks that have pulled back, well, that's just going to further fuel the growth that they've had there. So really, really cool there. Also, one last thing I want to point out, hedge funds use ETFs as well. So you think of these guys as having like a lot of money. One of their more popular products is ETFs. And in fact, their total short interest relative to the product that they're using, I mean, it's a third ETFs. They find it easier to just do that too, like you guys do. And they say, well, I'll just go pick an ETF. I want to be short the market. I'll pick my favorite one and I'll short that ETF. Very, very cool. Not one of them is a leveraged ETF, right? Please keep that in mind. That's one of my bigger lessons that people often go, well, but why, Dustin? But why? You do not hold a leveraged ETF, long or short, or whether you're short the long ETF or long the short ETF, you don't hold them. They're not meant to be held. You will lose more unless you have impeccable timing. That's where they stand there. So anyways, I just thought that'd be fun. We'll take a look at something, use up a little bit of our time today to try to teach you something new. If we look over at stocks in the news here today, you're going to have Best Buy. A lot of these are earnings related. Best Buy stock had a great day, and rightfully so. Very, very good. Remember, we started the earnings season, the retail portion of earnings season, by saying, if your inventory is down, your stock will be up. If your inventory is up, your stock will be down. It's as simple as that when you report, when retailers report their earnings. And so Best Buy, overall sales were down about 11%. That wasn't as much as expected, but we were expecting a downturn in their sales there. Inventories down 14%. There you go. Well, that must mean they're making money. Not necessarily. You got to look at their gross margins. Gross margins were up to 23.5%. It was up from like 21 and a quarter, something like that. In other words, it's the lesson that I've been saying this whole time with you guys. If you sell less, but you're able to make more, we'll take that, right? That's okay. We'll take that as well. There's no problem with that. If you're a retailer and you can sell less pencils, but you can charge more for them, great, that's fine. And you didn't have an inventory issue, awesome. So that's what's going on with old Best Buy over there. Up next is another retailer, Abercrombie and Fitch. You want to guess what their earnings were like? You want to guess what happened here? So they beat on earnings, beat on revenue and everything. They did raise their guidance, so that makes it a three-peat, and we know the performance of three-peats here this earnings season. They obviously did way better than that. Same thing. Inventories are under control. GameStop. So GameStop, about 4% on the day. Not really a big deal for GameStop considering how volatile it's been. Carl Icahn apparently is and has been shorting the company. He is not afraid of all of the Wall Street bets people out there. And Godspeed, because we know what can happen. What else do we have here? Baidu beat on earnings as well. I didn't get a chance to look into this one deeper to give you anything interesting here, but they did beat by like 20 cents or something like that. 15, where's the beat? 23 cents. So it was a good beat for them overall. Zoom is the one I was looking at here earlier because Zoom, I think, got the wrong end of the deal here. I think people are looking at this from a tax loss perspective, right? So Zoom reports their earnings there, and they did lower guidance going forward. They were trying to set the tone for the next 2 years. So lowering guidance for them was not just saying, hey, next quarter, maybe not so good. They're saying, for the next 2 years, here's our goals, here's what we're going to do. That can cause them to have to lower their guidance a little bit. Keep in mind, this company still does over $1 billion, or has over $1 billion in free cash flow. Can you say that for a lot of these kind of like late start sort of public companies? You can't say that. Can you say that about Uber? No. Lyft? No. Splunk? No. None of those. You can't say that kind of thing. So over $1 billion free cash flow there. The focus usually is on the enterprise customers. Those are the clients that spend over $100,000 with them to have that actual product there with that. And so their total revenue from clients that are the enterprise, the 100,000 plus clients there, up 31%, so going well there. They added a ton of new seats. And when I say seat, that's 10,000 seats, right? So one counts as 10,000 for them. Really good for them. I think what people are looking at here is, okay, that's pretty good, but that's probably the best it's ever going to be. Right? A lot of new uptake with the phone service that they have, and they're doing well. But people look at that and say, well, but because of competition, because of the existing market share you have, that's probably all you're going to get. So that's probably what people are looking at. I don't know. I just thought, well, that seemed like a good earnings report there. And it didn't do too well. All right, as of tomorrow, let's see what's going on here tomorrow. John Deere, the only real earnings to come out tomorrow, so it'll be a kind of a quiet day. Expect whatever the day starts at is how the day finishes, and we'll see what happens, of course. But I don't think we will. I don't think we'll be here. We'll probably probably let everybody go. All right, so I will take your questions if you have any there and see what we can do. Actually, Kirk, fun fact, when I turned 18, the worst advice I was ever given was just go get a credit card. Make sure you start building your credit score. And I needed a computer, so I went to Best Buy and I got a Best Buy card. I did great with it. It's fine. I didn't get in any trouble or anything, but probably could have chosen something better as a young 18-year-old. And I remember they gave me a $400 credit limit. And that was what I got initially. And I was like, what? That's good. You could buy a computer for that, you know? So I don't remember what I bought, if anything, but that's what happened. The railroad workers proposed strike. I don't think there's going to be any strike, actually. I think that that is not going to happen. Thank you. Happy Thanksgiving to you and, of course, to everybody else as well. My least favorite holiday of the year, but I do like hanging out with family and stuff. It's the food, you know what I mean? We're trying something different this year. We're going to have a non-Thanksgiving Thanksgiving. Yeah. If you're a Mac person, don't you just go to the Apple Store? Yeah, I guess it depends on where it's at, though. You think I'm more interesting? Aw. Well, that's nice of you. That's nice of you. I think that we just try to get past the general, you got to have a budget. Okay, what else? What are we doing? I like getting deeper into things instead of just be a good steward of your money. Okay, specifically how? Tell me how to do that. I like doing that sort of things there. All right, let me go over here and do this here like that, and I will wrap it up for the day. I appreciate you guys hanging out with us today and always. I wish you a good, happy Thanksgiving and a safe one as well. We'll be back, of course, next week to do all of this all over again, and adios.